Good evening, ladies and gentlemen. Thank you very much for waiting patiently. We are ready to start with our fourth quarter and FY12 earnings conference. As usual, I request Chandra to make some opening remarks, and then we'll take Q&A.
Thank you, Pradipta. Glad to meet all of you to announce our Q4 and FY12 figures. First of all, I want to tell you that we are extremely excited about our results this year. We have grown 31% for the whole year, and the revenues are at 10.17 billion. So we have crossed 10 billion as the first IT services company here in India. And our profits have done very well. For the whole year, we have crossed 10,000 crores in profit. It's 10,638 crores. And let me look at the quarter and let me look at the year separately. The quarter also we are pretty excited because the volume growth for the quarter has been 3.3%, which is pretty credible in unusually a soft quarter. Then in terms of constant currency growth, it's about 2.3%. The dollar term growth is 2.4%, all pretty credible. And if you look at the US market, which is a very important market, we have grown over 3.2% in dollar terms, which means that we have grown in the US market also in constant currency and rupee terms. Then if you look at the BFSI sector, on a constant currency basis, again it has been a flat sector, which again is credible in the current environment. So overall, we feel very good about the quarter. If you look at the year, it's a 31% growth in terms of revenue terms, crossed 10,000 crores in profit. Volumes for the year up 23%. Year on year, there is a pricing improvement of 1.3%. So we are pretty good about the overall performance. And in terms of the specific service lines, number of service lines crossed $1 billion. Our infrastructure business, our BPO business, our enterprise solutions business, our Europe business all crossed $1 billion of revenues during this fiscal year. So it's been a pretty satisfying quarter. And in terms of manpower, our gross additions have been all-time highest with over 70,000 people. And 70,400 people were added during FY12. And in terms of net addition, again all-time high, a little lower than 40,000 people is the net addition of manpower this quarter. Attrition has come down. IT attrition is a little over 11%, and utilization is very good. And it's excluding trainees currently at 80.6%. So overall, we are pretty happy. With those, I'll take questions. Thank you.
First question from Kritika Saxena.
Thank you. Hello? Hello? Yeah. Thank you, sir. To begin with, just can you touch upon the margins as well, sir? What were the contributing factors to margin? And in terms of currency, could you just point out what was the impact for the quarter and also Forex impact?
I want to take that.
Okay. As far as the currency is concerned, we obviously, compared to the previous quarter, we have had an appreciation of the rupee in a relative sense. And therefore, last quarter was at 51.07 rupees to a dollar. The average became 50.07 in this quarter. That was the direct result, and which had an impact as far as the revenue was concerned as far as this quarter, as well as on the margins. Margins, the picture was 71 basis point reduction as far as because of the currency.
Okay. Chandra, in terms of the BFSI traction that you've been seeing, you've been fairly confident about BFSI. Last 2 quarters, we've heard about little amount of concern on the BFSI area. How has it been for the quarter?
As I said, BFSI has been good. We have been flat this quarter on a sequential basis. But we have signed 3 large deals in BFSI this quarter. So from here, we should grow.
Okay. So across verticals, if you could just share with us, how's telecom been? And manufacturing, retail, of course, you've been performing very well.
See, the good thing about this quarter is we have grown in all major verticals. You take telecom, you take retail, you take manufacturing, you take life sciences. Across the board, we have delivered growth on a constant currency basis as well as on dollar terms. And in terms of BFSI, as I said, on a constant currency basis, we have been flat. If you take the year as a whole, all our verticals have given double-digit growth. Telecom registering the lowest growth, I think almost at 14%. Every other vertical has been either at the company average or above the company average. So we have a very holistic growth, and deal momentum is good, so we are pretty positive.
And North America and Europe, Chandra?
See, North America has again delivered good growth in this quarter and has delivered excellent growth. UK has delivered excellent growth this quarter. Year-on-year basis, North America is almost at the company average. UK has grown higher than the company average. Europe has grown very significantly, almost over 40%. So Europe on a year-on-year basis has done very well. This quarter, Europe has declined, and that's primarily because we've had last 2 quarters, exceptional quarters in Europe, and it has reduced this quarter, but again from here it will grow.
Okay. A quick question to Ajoy then. Ajoy, the hiring target for the next year, considering we've ended the year today, and the wage hikes, if you could share with us for the quarter? For the next one.
I want to talk a little bit about that. See, from a hiring point of view, I want to highlight 3 or 4 points. We have had a year where we have had record additions, both on gross and then net. And our utilization in this quarter is lower than the last 3 quarters. So we have a huge bench that's already sitting there, and the training has been completed, and all these people are ready for deployment. And in terms of trainees for next year, we have already made offers over 45,000 people. And our attrition levels are a little, is coming down. So considering all of this, we would like to project an addition of about 50,000 people for the next fiscal, but we will calibrate it as we move forward every quarter.
Yeah, it's about 50,000 as Chandra mentioned for next year. 43,600 trainees offers have already been given. They will come in, and that's from the hiring point of view. As far as wage hike is concerned, we are going ahead with the wage hike, and it's going to be 8% on an average as far as India is concerned. So individually, depending upon the experience, depending upon the grades, people would see somewhere between 6 to 10% as the individual increments. When it comes to the developed markets, then it is 2 to 4%, and emerging markets, it is 6 to 8%. So that's the wage hike that we are going ahead with.
Okay. And Chandra, you've always been confident that you'll be able to beat NASSCOM's forecast as a whole in a full year basis. I understand you don't give guidance, but are you still confident of that? And
Yes.
just a quick word on the next 1 year. And
Yes, I think we do. I think we have good momentum, and we are pretty happy with our performance in Q4 and then FY12. And our deal closes have been good. The pipeline is good, and we are seeing traction. So we would continue to maintain that we will come ahead of NASSCOM estimates for the next fiscal.
Kate Key from Bloomberg.
Hi there. I was wondering if you could give us some kind of update on how products and platforms have done this year, and what you're going to be working on going forward.
See, the products and platforms, we call them as nonlinear, and we have significant investments in this space, and we should be starting to report the numbers. We have not yet started to report the numbers because this quarter, again, being a small growth from an overall point of view, so we kind of delayed it. We will be reporting the numbers in the future, but we are seeing tremendous traction. As you know, our banking product, Banks, is doing exceedingly well, and we have products in a couple of other verticals which are picking momentum, and we have a variety of platforms. All those platforms have got a few clients, and they are all seeing lots of opportunities. The overall revenue from the products and platforms is still small. We've been reporting under asset leverages, so you will see the number. That's the overall number at this point in time. But that will be a focus, as we have always said, and we will start to share more color going forward.
Bala from NDTV.
And also I'll tell you this, if you ask me whether we had a 10% incremental growth, a statement I've always made is that we want to measure ourselves from this quarter, Q4, where we will say, where we had said that 10% of our incremental growth will come from non-linear growth. If you ask me if the answer, probably the answer is yes. But since the numbers are small, we are not yet reporting that in that basis, but we will report that going forward.
Chandra, hi, Bala from NDTV. Wanted to check what the outlook is for fiscal 2013, both from a demand and pricing perspective. What's it looking like? Also, if you can throw some light on discretionary spending. Earlier you indicated it will be flat. What's it going to be for 2013?
You see, we had given a lot of statistics about how many customers have finalized the budget and how many of them are increasing, etc. So I'm not going to repeat that. And all I'm going to say is that we see a good momentum, and we think next year is going to be a good year. And earlier to your question, I answered that we are confident of coming ahead of the NASSCOM estimate, and the pricing is going to be more or less stable. Last year we said the same thing, but then for the whole year we have shown an increase of 1.3% in pricing, which is not bad considering where we are in the world. And so I think you should not expect a significant improvement in pricing, but I think it will be stable. We don't see a concern.
So what are the challenges in this environment? Are you seeing decisions making taking longer by clients?
I think decisions are happening, and we see easing of spend in the discretionary area as well.
Sure. Ajoy, in terms of visa costs, has that also gone up for this year? And overall, are you still facing challenges in terms of rejection rates still being high for L1s?
So rejection rates, as far as that is concerned, that remains very similar to what we had earlier. It has gone up, definitely, as compared to what it used to be, somewhere around 50% kind of mark. And as far as visa cost is concerned, that is the way we plan our visas, the number of visas that we want to take, distribution between H and L. So it's a fairly managed kind of an environment at this point in time. So we are very much around the same level as we were earlier.
Amol from C Business.
Yeah, hi sir, Amol. Sir, actually you answered the part of question to Bala, but still, I mean, what we understood is, still there is most of the clients don't want to spend, and there is a reduction, and there is outcome-based pricing or the value-based pricing. Most of the clients are reducing the cost. So how are you dealing with them? And I know that you don't give guidance, but still, how long the situation will continue?
You answered part of my answer. But having said that, as I said, the overall outlook, there is momentum, and there is definitely going to be two types of engagements, or three types of engagements, and which are optimization related, growth related, compliance related. And you are also going to see business models evolving, whether it is outcome based pricing, transaction based pricing, platform based pricing, all those things you are going to see. But those things will evolve. They are not going to be a significant portion of your revenues next year. You will do some deals like that, which will be pilots and proof points. Even if you are ready to do, customers are not going to adapt to a different business model overnight. So all those things you will see, but they are not going to contribute to a significant portion of your revenues. But those trends will emerge. But overall, the momentum is good.
And also on macro front, would you like to tell something? Because in NASSCOM you are told that the macro will continue. So are you still?
I say the same thing. I mean, it's the world has all these things going, and I think we have repeated it so many times, and nothing more color we can add on that.
Ajoy, since we understood that the 50,000 target, but since visa rejection is taking place, by any chance will you increase the offshore local hiring by any chance?
On-site
On-site
local
hiring?
hiring.
Yeah, see, this year, if you look at the current year itself, as far as the hiring in US is concerned, we did more than 1,600 gross addition in US. And we are increasing our hiring as far as US is concerned, including hiring trainees. So we'll do that. We'll continue on that path.
Any number?
No, there's no number as such. So that is Overall number that
That's
we are
part of the
giving.
project planning.
That's 50,000.
Execution
that we will
planning.
be doing, and yes.
He has been busy, I can tell you.
Aditi from Reuters.
Hello, sir. Of course, everyone knows you don't give outlooks, but what's your order book looking like, and what challenges do you see sort of in the Indian market as well next couple of quarters in terms of growth?
See, the order book is very healthy, and we don't give numbers, and it has been continuously improving every quarter, and we are happy with the order book we have had in Q4, and based on which I am saying the momentum is good. If the order book is not good, I will never say momentum is good. So you have to interpret those two words together. Then in terms of the Indian market continues to be volatile. Predictability is a major issue in Indian market, and we have grown this quarter compared to last quarter, and so we will see.
And
Market share is going up, so we'll continue to do so. But you know, we don't want to talk about whether a market share with respect to a specific competitor. That's not the way we approach business. I think we do what's good for our customers, what's good for us from a strategic point of view. So we will build capabilities, we will work closely with the customers, and we will be relevant to our customers, and in the process we will grow. We never have a view about a market share vis-a-vis somebody.
okay, thank you.
Hello, so you just give us a sense on the volume growth in the UK and Europe and US region. Has that been a matter of concern for you?
See, as I said, this quarter we have grown 2.4% in dollar terms. In the US we have grown 3.3%. So obviously the volume growth in the US has been higher than the volume growth of the company. And UK has also grown very credibly, so there has been a good volume growth in UK. And there has been a dip in Europe, and I explained it. Europe, please look at it from a yearly point of view, it's more than 40%. And we've had 2 exceptional quarters on the back of it. The growth has come down a bit. It will pick up next quarter.
So the US court has given the class action lawsuit, they've given a go-ahead. So give us a sense whether that's being a matter of concern for you.
See, I think since it is subsidiaries, I will not comment on that. But again, we have given what our view and our comment earlier, and I would like to stick to the statement. If you want, I can repeat the statement for you.
Ajoy, I just wanted to ask you on the wage front, how easier or difficult or challenging has it been in terms of providing increments and also wages? Because Infosys also did not give increments in that front. So give us a sense how easier or difficult or challenging it has been this time.
See, from our point of view, we have looked at our business. We are looking at the kind of growth that we are looking at going forward, and the kind of performance that we have delivered. So keeping all this in mind, we have gone ahead with our wage increase. Now we'll have to work towards ensuring that we retain the margins that we have said we will be doing. And as far as the variable for Q4 is concerned, that also we have said it is 100%. So we are confident, and with an 8% average in India, I think people should be happy. So that's where we are.
And high performers will get double digits. So.
And Newswire 18, Ithika Sharma.
Good evening, sir. So much has been said about client budgets. There's a view, especially after Infosys' result was announced, that growth in the next financial year could be back-ended. There's a view that there's no clarity as to how would the market be after 6 months. What do you think about it? Do you also think that there's lesser visibility now and that we might see a stronger H2?
From a purely TCS point of view, we
Yes,
don't see our growth to be back-ended.
So it's going to be equal throughout the 4 quarters?
It's going to be a normal year.
Shivani from Business Standard.
Hi, Chandra. Hi. Just with regards to BFSI, flat, yes, better than peers, but could you just give us a sense what's the reason for that? Is it, some of your peers have been saying sudden ramp downs and all that, so is that the case with you as well? And Ajoy, BPO attrition, can you say something on that? What's been that?
So I think on the BFSI, it's not due to any ramp downs or anything. I think the BFSI is a mix of a lot of different things in our portfolio. We have the banking services, we have insurance services, then we have the products business. And sometimes the product business is a bit of volatile, and they have again done exceptionally well. If you take a year on year, the product business has grown more than, I think it's 33-34%, somewhere in that range. So in some quarters they show higher growth, some quarters they show a lower growth. But the point is that when the overall growth itself is very small, then you will see it. You'll notice it. When the overall growth is, in a Q1, Q2 kind of scenario normally, which are good quarters, then you don't see the impact. But in a quarter where it's a smaller growth, then you see it. But there is no specific negative factor that has contributed to BFSI. That's why I have said you will see growth in BFSI going from here. So I thought I will address it upfront.
As far as attrition breakdown is concerned, so overall is 12.2%, which is global, that is including all service lines. Now, as far as IT is concerned, what Chandra mentioned, it is just over 11.1, and BPO is somewhere around 21.3, 21.4. But these are all global numbers.
Ajoy, are you, last year, FY12, your hiring from US campuses was around 200. That was the number we had. Any number that you are able to share now with us, and would you be looking at that hiring as well?
See, campus hiring is going on. We are going strong as far as campus is concerned, and we have been visiting various campuses, and we have given the offers already. And now, during the fall semester, we will be going again and doing our campus recruitment as far as this year is concerned. But I'm not in a position to give you a breakdown between, like the question was asked earlier as to how many in US. So we'll have to just wait for some more time before I can do
Honestly,
that.
it's very difficult to plan to that level.
I will definitely hire in campuses in US.
Thank you.
Kenan.
Chandra, do you expect the marginal recovery in the US? Employment data is lower now. Do you expect the economic recovery in the US to be sustainable this year? And also, the elections are coming up this year again. Do you think the entire comments about outsourcing or against that will pick up in pace?
I think, on the first one, more than what I expect, I have to go by the general view, because there are a lot more smarter people about economy than I can possibly predict. The general view is that the US is recovering and it will do better as we go forward. So that should help to ease the situation overall. Secondly, with respect to there being the election year, the specific issues or the specific challenges, and we are tackling them. And we are tackling them by doing a number of things. We are pretty focused on being compliant all the time, and we are hiring people locally, and we are executing the projects in the most efficient way, doing a very detailed planning on the staffing of every engagement and every client. Now, these are the things with which we can address that. There's no one broad statement you can make.
In terms of your clients in the US, do you see them benefiting from the economic recovery? In your, I want a specific
I think what happens in the economic recovery is that it changes the sentiment. That's the most important thing, because most of our customers have decided on a budget, and they will go ahead with that budget. And if there is an iffy thing, when the sentiment improves, the iffy thing becomes positive. If there is an iffy thing and the sentiment is bad, then it becomes negative in some cases at least. So it's more, I think a good sentiment is needed.
In a previous interview, you had said that in the fourth quarter and the coming first quarter, the current quarter, that recovery in terms of discretionary spend picking up would be slow. Do you continue to see that, or do you see?
I said that, I gave a comment, I think late February or early March, basically saying that we had seen much slower spend on discretionary spend at that point in time, and since then it has eased as of today.
In the US, how are you seeing discretionary spend? Do you think it will come back to the 2008 levels, or do you think it's already come, if not?
Say it has eased, it's getting better, leave it at that. So it's very difficult to say what is 2008 level, 2007 level.
One final question from my end. For the current fiscal, do you think for TCS it would be better than the previous fiscal?
That's more than giving guidance.
You said normalize, so we can't make out much.
The only comment we say always is with respect to NASSCOM, and we have always said that our intent is to be ahead of NASSCOM. And the question was asked, do I maintain that? I said I maintain that.
The problem for us is that NASSCOM itself has lowered the target from last year. So for TCS itself, we are not able to put a.
See, we have delivered a certain growth rate. We have delivered a growth in Q4. We have exited at a particular rate. You know where we are. And I have also given certain comments about the year ahead. So now with this, you should be able to make out.
Thank you.
Which you've been doing every year.
Thank you, ladies and gentlemen. If there are no other questions, please join us for a cup of tea. TV guys, come up for your bite. Thank you very much.